asked me about margin recently. I'm going to use Robinhood in this example. There are many different brokerages. There's Moomoo, there's Robinhood, there's E-Trade, there's Webull. I don't think you can get margin on Cash App, but Cash App can be used as a brokerage to buy stocks. There is very limited amount of stocks you can buy, though. You might be able to buy AGNC, you might be able to buy AR. You definitely can't buy most of my favorite ETFs. You get the point. So margin is APY. It is not APR. You will be charged a lot less than a credit card. Please, please, please do not use margin until you are comfortable with your investing. Please, please, please do not use margin for day trading, especially if you are new to investing. You can lose everything going to a margin call. What's a margin call? If you drop too much, if your stock dropped too much, you go into a margin call, they say you owe us this much money and you need to pay us back immediately. If you do not pay them back or deposit money or sell stocks to get that money back within 2 to 5 days, depending on your brokerage, they will sell your stocks for you. So yeah, be very careful. If you use Robinhood Gold, real quick, as you can see, the more money you have with them, the cheaper margin rate they're going to give you. They want an incentive. They want all your money because they make money when you give them money. All of them do. Don't let anybody fool you. When you give them money, they make money. They're always making money off you because they can lend your money to other banks. You get the point. If you do gold, you can either pay $50 for the full year or you can pay $60 if you're going to do month by month. So you do technically get $10 off if you just do a yearly subscription. And when you do that yearly subscription, you get $1,000 to borrow. Right? You can see the example below. If you borrow more than $1,000, you would just plug in the additional to see how much you're being charged. In this example, we're going to be very safe. Let's say we're new to investing and we're paying $5 a month and we want to use the full $1,000. What we're not going to do is go into a risky stock. I'm going to show you an example. We're going to use PLTY as a what not to do. If you wait until they announce the dividend, it's usually higher than if you had bought it a couple days before, right? Sometimes it drops. But if you didn't know, all these dividend stocks drop by the ex-dividend amount or more on ex-dividend. You see how it dropped? You see how they announced it and then the next day it immediately dropped? And then the market fell even more. If PLTR, what PLTY is based off of, if PLTR drops, PLTY is going to drop. Almost always. Sometimes on the day before ex-dividend when people can qualify, I can see these ETFs go up, but it's rare, especially with these little mini market crashes we keep having. I just see these stocks plummet. Had you put all your $1,000 into PLTY on Wednesday and you were paying like $78, you would have gone into a margin call because it dropped so much. So be careful. Now let's go the safe route. Please do not put all your money into one stock either. Have at least a couple. I love AGNC. You can go back 5 years. You will see they were paying 12 cents a month every single month. When they drop, except for when everything crashes is when you see AGNC crash. And I've never seen them go below $6. I love them. They recover well. You guys know. I always talk about it. It's sentimental. I wouldn't pay $10.30. I would hopefully it'll drop to 10 again as it normally does. You can see it fluctuates. I'll show you guys. But it pays 12 cents every single month. And we'll use it in my next example. Say we wait. We don't agree to Robinhood Gold. We want to wait until our favorite safe stocks, our favorite safe dividend stocks are lower. And I'm just going to use AGNC as one because I want this example as easy as possible. We have 1,000 margin. And we buy AGNC at $10 a share. We do a limit buy. I have a limit buy video if y'all need it. We got 100 shares. It pays 12 cents a month every single month. You just made $12 off that month if you spent all 1,000 buying AGNC at $10. But wait, don't forget, you paid $5 a month to make that $12. So you got to remove that profit. So you made $7 profit off your 1,000. If the stock drops, you would subtract that from, you know, how much you made. If it went up, you would add it. But for simplicity, say we do not want to sell agency, we want it to sit and make us money every single month. And, you know, after we pay our interest, you will be charged every single month for any interest that you used. You would make $7 profit. You paid $5, you made $12. That's $7 profit. I mean, you guys get the point. Hopefully this helped you. Do your research. The more dividend stocks you have, the safer you are. Because when one stock is down, another one will always be up. People will sell risky stocks to invest in the safer ones when the market is very volatile. And when the market is volatile, it can drop quick. So please don't max out your margin unless you know you're covered. And even then, be safe about it. Hopefully this helped you guys. You guys have a great day and happy investing.